The broadcast is now starting. All attendees are in listen-only mode.
Here we go. Good evening. It's Ken at Tortoise Capital. It is the nightly strategy podcast for May 14th, 2020. So I want to start off with a shout out to my friend, the Madagascar international officer. He's here from his Ministry of Defense, his nation's first uh, officer selected to attend our Command and General Staff College. I've been working with him on his master's thesis all year. He successfully defended his master's thesis today with the committee. He was studying the ways in which his nation might counteract cross-border terrorist and hybrid state actor thievery of their nation's cattle, the kudu. And so we went through a applied case study research methodology that I've developed, and it's specifically well suited for guys that are trying to make practical decisions in the world and persuade their senior leaders. So he went through a structured approach in which he began with his R1, his pre-research position, where I asked him to document all his existing beliefs and status and his awareness of the current position that he finds himself in. And then we give him a structured literature review that will systematically test all his assumptions and beliefs to validate his entire mental models of the problem area. We then ask him to come up with a new set of recommendations now that he's spent some time with the literature, and that's the R2, updated personal position. Before we are ready to accept those recommendations, we asked him to step outside of his newly discovered position and undertake a stakeholder analysis. We ask him to reframe the trade in both directions and look at all of the agents and actors and their interests and map out possible scenarios in both sides in multiple directions. Sounds a lot like trading and trade framing. And we ask him to adopt these other points of view and then to use that lens, a set of lenses, to improve his recommendation for the final presentation to his Minister of Defense or whoever the chief decision maker is. And that's what we call the R3. So it's a systematic effort to improve our thinking, but also come up with good answers to interesting questions. And it's a way that we teach guys to develop critical thinking and creative thinking, but also structured practical thinking that is professional in nature. So he did that and did just a superb job of it. Now he's prepared to go back and teach that to all the staff officers in his Army, which is one of the reasons that he gets sent here. So we feel like there's a good chance to help upgrade their professional staff back home as a consequence of how we conducted this research. We used an ecosystem approach, as it might not surprise you, and did some mind mapping and some influence diagrams and drew some sketches to help describe his understanding of the nature of the problem, which was this rising level of violent activity expressed by the blue region, and then things that the Army can do to draw down that violence, and then some formulas that started to represent all of the different players and partners. So this visual graphic allowed him to spend 15 minutes really describing his deep understanding of the ecosystem. And from that, we then arrayed various possible alliances with the people who are parts of this ecosystem and looked at ways that we could scope it that would give his nation a competitive advantage in solving the problem. So he did some ends, ways, and means analysis, and he did a strategic, operational, and tactical frame of reference in order to get his arms around this very challenging problem at home. And then he walked away with a set of very specific action plans that he could take back to his chief decision maker, prioritized in a way that he can now start taking action moving towards success. So of all the things that he could do, there's a list of them. Pick one, let's go. And so we worked our way through how to start implementing transformational plans using the Cotter transformation change model. So this may sound very familiar to you, but this is a professional grade way of responding to complex dynamic situations filled with VUCA and filled with a series of frames and iterations and an adaptive changing environment and all that stuff. So the things that we're learning how to do are connected to a legacy of problem solving and decision making and policy choice and capability development that has a pretty long legacy. So I feel like that what we're doing is in direct support of this kind of thinking. In fact, many of the things that we learn in here about decision making and self management and team building and battle drill and um, using evidence to drive our routine, stable, simple systems finds its way into my classroom with these military officers, because the things that we do here are very similar to the kinds of decisions they have to make in the world that operate in many different time frames. They got to worry about the next step they take, what's going to happen the rest of the day, this week, this month, this year. So it feels very much like the multiple overlapping time frames that we contend with. So I thought I would share that with you and just give you a new perspective on the skill set that we're really trying to work on. So I've uploaded I want to go to this frame of reference first. This is a simplification of what's going on these last 3 days. And before we look at the market health check, which is kind of busy, I wanted to abstract it and just kind of show you what these last 3 days have looked like from an operational and a tactical point of view. So 3 days ago, price was hovering around 293. And over the next 3 days, to the low point of this morning, it sold all the way off to 272 by the time it got down to here at the intraday low. So that's minus 21 bucks, and that's an 8% sell-off. Now, 10% sell-off would be sort of the official policy that, yep, we've got a correction, and then a bear market is officially kind of defined as 20%. Now, that's been true for about 50 years. But ever since the internet bubble and certainly the 2008, 2009, that we've been sensitized among the professional traders to start moving sooner than that, because people have engineered their systems so tightly and used so much leverage that you can't afford to wait for a 10% correction to begin taking hedging action to protect you against a 20% bear. So in fact, it feels very much like a 5% sell-off is interpreted as a correction. So about half of that, about 2.5%, people are really starting to be concerned. And that's a little over 1 ATR these days. So even a 1 day adverse move that looked like day one in this model was starting to be cause for concern. And when we put the sense making overlay on that, we will see that there are some other contextual reasons why those sell offs were getting ready to challenge some important support levels, and that the inability to move higher looked like it was being rejected at resistance levels. So just the fact that it sold off a couple percent on the first day is enough reason to start raising some warning signs. When you add to it the context of the market being rejected at observable resistance after a 30% run up, adds even more reasons for guys to be concerned about this. Well, the next day opened where this one closed, hint one step up and then collapse with just a fractional rebound at the end of the day. And then today, when everybody was fully worried and we were sitting right at the Bollinger Band mean, and only that in the 10-day low acting as support, it opened about where it closed and then sold off harshly, and that's what took it all the way down to 272. So what you had was 3 steady, continuous, large range days of directional selling in a row that brought it right down near 10%. So it was actually an 8% sell-off, but it was within arm's reach of 10%, which would start triggering some hedging behavior on behalf of longer-term robotic and algorithmic systems. Well, it didn't crash through 10%. It didn't go beyond Z-1. It held support intraday. and gave us the most beautiful, clear, smooth owls that you ever saw. And then the rest of the day was nothing but good, where it went from 272 after what we would call now a morning hook. Then it gave us an owl and an opportunity to go from 272 to 284 in an orderly fashion, which was a gain of $12 on 272, which is about a 5% intraday retracement. So there's still room to go. There's still, $9 between where it closed and where this little 3-day sell-off series happened. But this is the kind of an operational move that spans 3 tactical days that makes day trading fun and profitable and feasible. But it also allows us to take advantage of swings. And now when we talk about swing trades on the long side, I'm usually looking for a 5-day move, maybe 10 days, 5 to 10. On the short side, because price action is not symmetrical, because fear is 3 times stronger than greed, those moves tend to be sharper, faster, and more quick to reverse once people get back to their normal buying quality on sale. So I now want to say that this pattern happens quite a lot, that there are many times it'll sell off 8 to 10%, but won't go further. That'll happen 3 to 5 times a year. Losses beyond 10% maybe happen once a year. Beyond 20%, maybe every other year. But even that's hard to say because the clustering of those kinds of sell-offs is becoming more frequent. But they're also more sharply reversed, too. I think when people start coming in with sovereign wealth funds and big banks who cannot really tolerate the idea of another one of those market craters from 2008 and 9. So there's a very real sensitivity to act fast, which is, I think, part of the reason why we see the Fed pumping 10 trillion. Well, if this pattern happens a lot, there are some things that we can do with core and turbo that I want to talk about. But so the first points I want to make is whenever you hear me say anything about a morning hook, this would be a perfect example of exactly the kind of thing that we're hoping to get. That it opens a little bit lower, just like we would expect, and then sells off sharply, just like we would expect because of the previous 2 days. But any short, sharp sell-off, when I say short, I mean in terms of time, it was a rapid sell-off, and then a P1, and then an RLXD and an OWL, and you get a morning hook where it looks like. Now, of course, this would never happen, but supposing you were market makers and you saw a bunch of people with swing trades who said, man, I still want to be long and strong these things, but I can't take more than 2 days of sell-off, so I hope it goes up tomorrow. I wish I'd been around to maybe cash my losses in here on day 2. So instead, what I'm going to do is I'm going to move up my swing trade stop to just below the low of day 2. So that I limit my losses down to about this level here. Well, if that were to happen, imagine some other alternate reality in which people could see orders in the market and said, well, let's just run all those stops and generate a bunch of momentum to the downside and trip all those tripwires. And when that's done, we can come in and buy inventory with size and run it all the way back here. Now, all these guys that got out down here below 2 are all suffering. Now, they're going to want to panic and get back in. So there's going to be gasoline thrown on this fire. And then we can actually, if we want, start offloading some of the excess inventory that we bought here and then just decide if we want to keep any inventory for tomorrow. Now, imagine some reality in which alternate reality in which that could happen. This pattern here would be evidence that that kind of stuff is happening, but I have no evidence that it is, and certainly I don't believe that. But that's just what it looks like, and all I can do is describe what I see, and that's what I see. So I just talked about this 3 day cycle. I almost think of it like, not almost, I think of it like day one, day two, day three of a sell off in an uptrend, in the same way that I might think of 3 days buying in a downtrend, after a downtrend, as a way to really test that if this is going to really endure, that would sell off would have had to occur. This big green bar could have been a big red bar and just continued down through Z-1. And same thing on the upside in reverse. So this 3 day cycle, like a 1, 2, 3, you see that pattern a lot. You also see that fractally happening in the morning, in the intraday sessions. And just think of the first mouse, third mouse, and fifth mouse, and a beginning, middle, and end of moves. If you were just going to place the second mouse, so let's say that you had some awareness of this on your playbook, and they had a flashcard that looked like this, and so on the after 2 days of sharp selling at a critical state, you might be prepared for exactly this kind of move. And what you want to do is make sure that you get the most out of your swing trades to the downside that you can, which I'm going to show you here in a second. But you also want to be available to the kind of intraday rebound that could give you 5% in a couple of hours. So in this circle region here, with the two green eyes staring at you and his little smiley face, how can we be the second mouse in all this? I'm going to just argue that the owl is a pretty nice way to be the second mouse down here. That, especially after a 3 day sell-off cycle on a big morning hook, hovering near a 10% sell-off, that being an owl is a pretty good way to structure your approach to being the second mouse. So you're not buying it just because it hit a 10% sell-off, but you required 5 criteria to be in place before you decide to enter a low-risk trade. And so if that were the case, then something like an owl entry is where you could be a second mouse on this kind of move. I also want you to think about how you could be a second mouse on these 3 selling days. It might be something like this, where you might have on day 1 started off with a hybrid frog, and then it worked so well that you elected to keep a piece as a core position, and then you let the hybrid frog work as much as it could, and then before the end of the day you're flat. So you're not carrying the overnight risk, except with a tiny little fraction that was paid for with market's money. And now you've prepared the money that you used on the short side here, that if the market continues in your direction, you not only could add a new core position, but then you could play turbo again, and you've waited for evidence to see that it collapsed below yesterday's low, and it's making new lows of the day. That allows you to be the second mouse on each of these successive selling days. And as you go, as each of these turbo trades are working, you can keep a piece to fund the swing trade so that you do get the advantage of any overnight swing, and you've built up a 3 day swing position, but minimize your risk all along the way. So when you add those 3 days of being a second mouse with core and turbo, and you combine it with the idea of being a second mouse on the rebound day with the owl pattern, being a second mouse is a survival instinct in your DNA. It protects against the risk of early entry on the basis of statistics. It requires some evidence that the cat's not there just going to bite your head off. It gives the first mouse the reward for being so brave, but there's old mice and bold mice, but not old bold mice, right? So that second mouse or that first mouse gets the biggest payoff until he doesn't. So being the second mouse also lets you get in relatively early, earlier than people who require some amount of evidence to make sure that it was working. Like maybe they would have required a new high of the day. So maybe the third mouse wants to see this price level before he gets back in. So if you can give the first mouse his proper, and then the second mouse with an owl, now you're getting somewhere in this space, you're getting no lose plus dinner for two and locking it in, and maybe even a second position locked in. And then when the third mouse comes in and keeps it moving past a new high of the day, bam, you've got a range stat move. And now you've been the second mouse. And the guys doing the heavy lifting are the third and the fourth mouse, the early mass adopters and the late mass adopters. So that's how you can think about being the second mouse. So now I just want to wrap it up and bring it full circle and say that now the whole idea of core and turbo is that we're using some intraday directional moves that are closing in a certain direction to justify holding some overnight risk paid for by the turbo position, but protecting most of that from the overnight gap. And then the next day being ready to resume the full position to the downside should it fall below yesterday's low, which is now a mechanical entry to the south. And then using the gains from this trade also to fund a second swing position fully funded. And then the third day. Now, how far up this stack you want to be before you cash 3 swing core positions? I would say not earlier than the owl, but certainly by the time the owl is in, you could. And then I wouldn't let this third swing position ever go negative. Why would you? Just get paid somewhere between the owl and break even on the third position. I think what you'll end up seeing is that just taking the owl position on that kind of a day feels pretty good. And then there's no risk. And then my best advice today being a Thursday and having that turnaround on a Thursday, tomorrow will be another day full of fireworks while people try to make sense of today's action. Was that really the first leg up of what's going to be a strong day tomorrow and then a return to price at 300? That's all those optimistic kids that are talking about that. Or is this really just an intraday dead cat bounce that hasn't even gotten all the way back to the start of the sell-off up 3 days ago? So really, this position here is a market that is in a critical state right now because it could just as easily go north and sort of reinforcing the God dang it. This thing could go north, and now this would then become day one of that buying program, and then the second day tomorrow you would expect to see another leg up if it was going to be a 3-day upward. But tomorrow is just as easily, if not easier, this. Because what really changed today? Nothing. We're still in bare normal. We're still 5% off that higher, the 10-day high. And so that's the first easy move down back to the towards the Z1 and through the Bollinger Band mean. So there is an equally likely probability of strong directional moves intraday tomorrow. So that's going to be the perfect conditions for hybrid frog and trying to turn these things into a golden chain where everything in the chain is working. Like today, the hybrid frog and then reinforcing the core positions, sure, turned into a nice owl and a couple positions in there and some pocket continuations as well were re-entries depending on how tight your stops were. So that's the abstracted model of the last 3 days price action that I'd like you to have in your mind as we now get ready to transition into looking at the formal, market health check and whatnot. Okay. So that flashcard right there is in your download file. All right. So keeping that in mind, let's take a look at today's price action. Oh, I had 5 master's thesis defenses today. I did Madagascar, 3 U.S. officers, and then the French officer did a study on how to improve his nation's posture with respect to data science and quantitative measures as part of a robust decision-making strategy for his nation. So it was equally interesting. He's going to go back to his Ministry of Defense and become a strategic plans writer. And so it was a very invigorating morning working on complex problems like that. This was another one that, he's been busting his hump all year and finally got a chance to do his thesis defense. We did all this through the web because of that stupid virus. And the real disappointment is, not being able to be there to shake his hand to say thanks for such hard work. All right, so let's take a look at the 10-day range. So starting with that outer bracket, here's the 10-day high, the 10-day look back period. Here's the 10-day range, and here's the 10-day low. Is that outer bracket. Here is the 10-period straight regression line, so you can still see the slope is up. But there's a lot of mixed signals in this sideways choppiness that you see. So we got the 30-period regression line still sloping down, so it has rolled over. So today's initial price breakdown was an owl short that got negated intraday. We have the dragon rolling over, and you can see the spine of the dragon. That dragon extension is still pointing downward, so those two are pointing down. The PSAR is still gently sloping up, but you can see that today's price action was completely on the wrong side of that. So all three of those things, plus the risk Z being in its posture, are all giving us, reasons to be concerned about the vulnerability of this market to the downside. We're still in the fall. We're almost getting ready to test the 0 line down here. So we still have a slight upward bias that's reinforced by the upward slope of the RL10, but counteracted by the longer term trend slowing down, as evidenced by the RL90 rolling over and the dragon rolling over. So it better fire tomorrow or it's done. The PSAR flip hit, but it didn't. The dot didn't flip on my chart, and the reason for that is that I am taking my PSAR off of the RL10 price and not off of the candle price. I like to see the confirmation of the RL10 taking out the PSAR and not just the prices. So in terms of my PSAR dots, I'm willing to execute when the price hits the dot, but the actual signal takes about an extra day or maybe 2 for the RL10 to catch up to this price action. Because what you'll notice here is that the RL10 by extension is going to probably be down about here where the yellow, maybe right here about where the yellow dot is. And so it hasn't quite yet hit the PSAR dot. Okay. So the 3-day look back period really was is here a high down to a 3-day low. So you can see the last 3 days contain both the 10-day high and the 10-day low. that's how volatile the downside is compared to the upside, which took 7 or 8 days to go all the way to the top. It only took 3 days to stretch it down to a new 10-day low. So sell-offs are not as they are not symmetrical with the gain. So it's climb up the steps and then fall out the window. You get a different price behavior in those directions. Okay. So we opened at yesterday's low below the Bollinger Band mean, sold off sharply, made a new 10-day low. We're getting ready to threaten the Z-1, but then the owl happened and we got back through the Bollinger Band mean and then closed just inside the southern skin of the dragon at or near the high of the day. What I want you to notice is, based on also on the last flashcard, that whole idea of the morning hook and the sharp rebound. So the short swing trades that I had in relative abundance were all covered today in that surge from the rebound. And the reason was I don't like holding swing trades short. It's a real act of will for me to do that. And so after a 3-day sharp sell-off that was almost 8%, I was content with that, and I wanted to preserve what I had. And in some of those, I had multiple swing positions in from the turbo trades. And so when the owl clicked, there was no way I was going to hold this after the open, or if it gotten higher than the open. So really what I ended up doing was it opened here, sold off this far, and then as it started coming up the stack, right about the halfway point, I just decided mass exodus, mass liquidation to get flat, make bank on all those, and then it traded all the way to the top. So that's what the day looked like. The 10-day low is still going to be down here. This move, could it get from the close all the way to the 10-day? Yeah, it just did. So it can move that far in a day. That's about a range stat move, though. So that's the maximum reasonable intraday move. Wasn't even irrationally exuberant yet. That's the funny thing. So that's that. Let's go see what worked. Excuse me. Okay, so the S&P was up 1.2 after being down almost 2% today. So it was about a 3% recovery. What was better? Tech and materials. There's some McDonald's, Chevron, Twitter, Tesla, Cat, Silver, Home Depot, Brazil, Cisco, and then UDow, triple Dow was the strongest at almost 5%. What was worse? Energy sector was fractionally worse, along with healthcare. Treasuries were up 1%, but still underperforming. Amazon, Boeing, Facebook, Simon Property, Apple. So some of those big tech leaders really didn't get it done today. So this was more of the broad index being bought as opposed to one particular sector or a handful of symbols making it work. Things that were actually negative for the day: Walmart, lumber, oil and exploration, Euro-Asia blend, Japan, Alcoa. Alcoa was down like 8% at one point. We're going to see that chart in a bit. And then VIX gave back 5%. It's had 10% days in a row, and today it turned around and gave back 5%. Okay. I'm going to try the speed run. Actually, I'm going to show you 3 charts first in case the speed run doesn't work. And so the first one I want to show you is Alcoa. And so the way um, Alcoa, you could manage it as this way: is that this is the man, this is the day, and you see it gap open, and then you start trading this thing down because it gapped down below our blue signal. And so you may or may not have a second position in, but you're now deeply in the money, especially when you compare it to how little your risk was. You're already holding 1, 2, 3 units of reward against your opening risk. So now it gaps in your favor, and now you get 1, maybe 2 more. And now this is one where you could say, it closed really poorly. Is that one where I want to actually hold the position? I probably do. But I wouldn't be offended if you just said, you know what, that's really enough, and I'm just going to take that exit right there and then make bank on that move from there to there against a tiny little bit of risk like that. So that's entirely your call, and that's the kind of problem I'd like you to have, is to suffer with that kind of challenge. This little snapshot, I believe I made, very early in the morning, and so this is a case where Alcoa was already down 8% intraday, and so this is what it looked like about 30 minutes in, and the decision was, what do I want to do? And I basically just put my stop down here, and I think that ended up getting hit because this ended up coming back and only being down like 2% by the end of the day. So we had a 5% intraday recovery. But that's sort of a snapshot. When you're doing core and turbo, that's what it kind of looks like. Here's another one. This is Virgin Galactic. And so we were short from this red arrow. And today it opened and sold off sharply. And then as it was starting to come back up, I had 2 positions in for swings. And then I just decided, you know what, this thing got all the way down to Z-1 and then rebounded. I just decided to capture that whole thing and get flat. And then finally, Simon Property Group. This was another one. We had 4 positions in. Yeah, there you are. So we had 4 positions in, and this was like the 4th day of solid selling, and I didn't want this one working against me. And I do remember that the last time that it was down in this area, it had a short sell. It found support here, then had a big gap up on this day, and then we got a really good long swing. So I didn't want to have 4 positions in and then face some kind of upward gap and then lose money on 4 positions. So I just felt like with that much in there, I'll just go ahead and take it. Now, if I hadn't put those extra positions in, I probably wouldn't mind just holding that like right there and then seeing if we could get some more tomorrow. But I just felt like today, as a potential turnaround day, was a day to get flat. So that's representative of core and turbo trading decision making when that day starts off well for you, but you're already in the 3rd day of that directional move, and you're more concerned maybe at this point about preserving gains than you are trying to get every ounce of juice out of that grape. Okay, so that's what I want to say about that. I want to back up just a half a second and talk about the Eugene put the comment in there about peeling, and that would be if I were, what do I think about, peeling pieces off. My tendency is to add pieces but then get all out when it cracks, because I am trying to hold right to the point where both the turbo and the swing are likely to start making their reversals, and so all of that leverage kind of disappears at once. and I don't even want to do that. And then I just get so nervous with those larger positions that when it's time to get out, I just cut it and get out of the whole thing. And then I know how to re-enter, and I can get back to the zero state quickly, but it's almost like I have to, when I get those multiple positions on, I got to just get to closure completely and then restart with a new cycle of a trade. So your mileage may vary, your psychology will vary, but that's the way that I sort of reconcile that. Okay. I would like you to think about water. And there was a phrase that came into my head that I didn't even have time to get it on. I had already printed this and taken a picture of this little sketch, but I want to put it now. And it's sort of the power of stillness and the power of movement with respect to water. Okay. And at both extremes, water can just be absolutely amazing. I mean, it's very obvious during floods. The extreme movement of water in times of floods. We live about 4 miles from the Missouri River, and when that thing floods, that'll get your attention. And yet, at the same time, the power of stillness, the owl meditation, and the still waters running deep, and the serenity and the sense of timeless eternity without boundaries that it suggests, and the power of the ocean and its infinite depths. There's a real spiritual, mystical connection to all of those that is compelling. And then just the ordinary movement of water and what it does for us. And so now, if we think about E, our environment again. Let me get my pointer going here. So we might say that water and snowfall on the mountains, and that water runs off. It goes where it naturally will go. So you can study hydrology and think about price in that metaphor of the channels that it cuts out and the boundaries that it stays in, and then only occasionally gets out into the edge of the floodplain, and then even more rarely beyond. So you get this almost a histogram, a standard distribution of price levels in the river. And then these clever monkeys that have figured out how to use water power because of the power of moving water, and they've hooked up a water wheel to a spindle a drive shaft that's going to turn the millstone that allows them to take all the harvest from their fields as a village, and the village builds that mill and the millstone, and they grind all their grain and take it to market. And then later, some enterprising monkey puts another power takeoff shaft on to that water wheel, and then runs secondary drive shafts off there, so you can do spinning jennies and perform other types of work motivated by the power of that moving water harnessed by these clever monkeys. And these monkeys might also take water off of that main stream in order to routinely irrigate those fields and expand their harvest. And they might divert some of that water into a pond as some backup, and maybe to support some livestock in a pasture and other irrigation needs. And then they might also fill up a cistern when they're very clever, because if you can use water to pump water to the top, now you have a primitive battery, so that you can then run this water from backwards down through the water wheel and keep things driving even if the river runs low. And then we're going to think about how further downstream that sometimes you come to interesting features at critical states where the water has to make a decision about which way it's going to go, maybe a big piece of rock. And then, that northern flow might go up in a series of 1, 2, 3, and maybe there's along the way, although the trend is up, there might be some fake 1 go-tos and some RLXDs or buying on dips or emerging dragons along the way. And C1, plan for 2, hope for 3. But on the other side, notice that when that wide river starts getting compressed into narrow and narrower ranges, the potential energy is building up and the speed is happening to the point where it can actually explode. And then bam, water as it behaves at the doji is different than how water behaves at the regulated water wheel or in the fields, supporting quiet, steady growth. Water at the doji behaves differently, and then water in the rapids behaves differently. And then if it comes to a waterfall and there's some point of no return, then that fat tail event really gets, and then somewhere down here in that whirlpool. And what happens next, I don't know, but what comes out of there is going to be seriously affected by that recent experience it just had, and things aren't quite the same anymore. And so we want to remember to respect the power of this thing and be alert to the possibilities and know the warning signs by paying attention to our indicators. I want you to think about this little sketch, the 1, 2, 3, in view of the previous discussion we had about the 3-day pattern, where the first day might just be an orderly sell-off. And we hope that it just terminates here. And our optimistic mind really is believing, yeah, well, that was just that one day and it's going to get back to normal pretty darn quick. And so we are anticipating this dotted green line up, just the recovery and the resumption. But instead, shock, second day, and we are still thinking, man, we'd love to see this. Now I can buy quality on sale because we're optimistic and we really favor that long side. And maybe we get some amount of evidence on day 2, like a morning hook and an owl, but then that thing doesn't work and it rolls over, and then bam, the big red Niagara. So we got these 3 days of selling, or 3 time periods of selling, and the big red doji of unhedged fear, because all the stops have been hit and now it's in free fall. So we want to respect this red Niagara and know what our price levels are and identify those support and resistance levels so that we don't go too far down through the rapids, and we certainly don't want to get lost going over the edge in a barrel. Okay. So there's 3 kinds of patterns that I want to talk about now. This is kind of related to the MACD histogram, but in a general sort of way. It can apply even to like the dragon. But really, in terms of MACD histogram, the one we really love is summer, because we've got all the confirmation. It came out of the spring, crossed the 0 line, and now we're in the summer and all is well. So we love the summer and we love a short fall and then right into this, back into the summer. So summer, fall, summer is very good because that's the second leg. Maybe it's even the third leg, but that can really be all the guys who are buying on dips won the day. And now this thing is ready for another big move. So we're on the lookout for summer, fall, summer. So we're in the summer and we're watching carefully. When it tips over into the fall, because we want the summer so much, maybe we're willing to tolerate the staying in the position in the fall. Maybe our optimism about that follow-on move allows us to relax our standards perhaps, and now we stay in that trade longer maybe than necessary. However long you stay in it, don't stay in longer than the 0 line and starting into the winter. You may not want to get out. You're not getting out just because it's fall, But if you've got some tactical reasons to get out and just to lock in the gains, like keep 2/3 of the move back to where you entered, that's fine. But summer, fall, summer is crucial. By the same token, we love winter, pause, spring, summer, because that feels like a normal turning of the seasons, the way things ought to be. And we know that the owl, where in that structure of winter, spring, summer, do you find the owls? Point to it with your clicker. Click. Well done. So owls are typically going to be found like right around in here. After the observable turn and you look up, you should start seeing some owls get generated. So an owl, when it works, looks like this. It might be owl, and then it doesn't hesitate at the zero line, but just rolls right into summer and goes. So maybe somewhere in here we're getting a second position. You know, your trade frame and your managerial skills will help you with that. But if summer, fall, summer is a special, and winter, spring, summer is our template, the other special one we care about is winter, spring, back into winter. And that's even more vigorous than summer, fall, summer because of the power of fear. Now, here's where I notice that our monkey mind can be a problem. In the same way that we have a bias to the long side in summer, fall, summer, we tend to discount the fall because we really want the summer. Like we don't want to get out and then have to get back in. That makes us feel like a silly monkey. And that same thing appears down here where you have winter, spring, and we're wanting to see it get into the summer. So we're going to try to stay in, even though it's gone back into the winter. But just remember that winter has these qualities: 1, 2, 3, bang, something like that. So what I notice is that our feelings are not symmetrical about those two patterns. Like the optimist in me can tolerate some heat in the fall because I'm hoping for spring. If you have that same level of optimism down here about I'm optimistically waiting for the summer because I want to see this pattern, but instead it's giving you that, you got to be pessimistic and just immediately get out or re-enter your short or add a short position because the power of these moves happen faster than the upside recovery of moves. So while I like summer, fall, summer, I actually like winter, spring, winter better for the short side because that feels like even more reliable. That they enticed some guys in and made it turn into the spring, and they just come in and smash it again. So as we think our way through this series, I would like you to just think of this as like a lattice work and some learning to spot decision points in critical states in this 4 seasons frame of reference. So you might have spring leads into a decision point at the zero line, and then summer is good. When it rolls back down here, at some point you've given back enough in the fall that it maybe comes into a doji, and now like maybe halfway down to the zero line, you might say, look, you're either going to resume and it's going to be the summer, fall, summer, or I'm just going to cut my, I'm going to preserve my gains and just exit here. And then from this point, where it's kind of in the middle, it's either going to become summer or it's going to continue with the fall down to the zero line. At the zero line, what's it going to do? Summer, fall, summer, hooray. Summer, fall, winter, like kind of hooray if you like the short side. And now this first leg down in winter, often an amazing move. And now it starts to roll over and hesitate and start incrementing up. You would expect to see some owls in here. Does this thing get all the way up the stack until it tests? Or is it going to roll over and rejoin the winter? Or from here, does it just not even hesitate much, but just goes 2 legs down? And then after 2 legs down, does it come up in the spring and then continue all the way to the summer, or does it come up winter, spring, winter? So we want to learn to use the insights from those directional seasons and then start understanding what price looks like inside those circles. How far is enough? Where are the support and resistance levels? What does that hesitation look like? And then as long as we can see that price action in both directions, we're going to be in pretty good shape. All right. So that's what I want to say about that. So in a nutshell, then, this is kind of just a quick flashcard on the power of water, the water of life. It's blue. That's why the RL10, the real price, is blue. And this is just to give you sort of an integrated thought process about what price is and all of the different ways that we manage it. This could also be your emotional bank account. What is the source of your emotional energy? Where's that mystical center that it comes from? How does it flow down to where that energy of your will and your spirit and identity, you can do something systematic with it and start making gains and using that same power to fund all different kinds of inquiries into self and businesses and systems? And how do we store it for when times are scarce? How do we use it to nourish some of our other products? How do we know when we're kind of grinding and it's still working? What do those doji warning signposts look like? How do we know when things are getting tense and our emotional bank account is at risk? What's the point of no return? How do we ensure that we don't collapse in here? And then after collapses, where we're just not satisfied, how do I make a new start and a new reframing? And how can I create myself a little tortoise shell barrel in case I do find myself going over the river? Well, just buckle up, hang on, here we go. So that's our flashcard. I would ask you to keep in mind the importance of respecting that 1, 2, 3 and the nature of the sell-offs, these 3 special patterns and what they represent. And then this notion of iterative, structured movements, almost from doji to doji, and always know what those price levels are. Those are the ones you see me marking off on the daily charts. Okay, so we're about an hour into it, just inevitably. How about that? Let's see if we can get the speed run going. If not, I'll record it separately. All right, so here's Alcoa, and this was what my final setup on it ended up looking like, where I cashed it around 650. So I used that yellow box was my my little doji. Let's zoom in on this a little bit. So this orange dot signifies I was using this doji here to frame my trade in either direction, and the next day we got the break down. So we got short here, and I used the high of the day as my stop, and then we had 1, 2, 3 days of selling. Today it gapped down, sold off, and started rebounding, and that just felt like enough. I mean, I like Alcoa. Apple, we cashed a nice power trade on that one from 295 to about 314. And yesterday, this was a couple days ago, and when we got back to zero state, and today we were just standing by, so that was okay. So the last 2 days we've been. Let me uncover that so you can see it. Yeah, that's what that should look like. Sorry. Notice the sell-off in Apple was nothing like the sell-off in the S&P, and it only had like this one selling day here, and then has already started to rebound. It's north of the dragon. I think that's a positive sign. Amazon, we're flat, just continuing to watch it grind. It's not really doing much of anything. Just observing the Aussie dollar just grinding. Boeing cashed a double position short, so we captured the green box with two symbols, or 2 scoops, I should say, against a small yellow risk. And again, that one started off as that turbo ready to trade it in either direction. It voted down, so we went that way. And then look at that nice exit down here compared to how strongly it closed. Boeing still is horrible. In fact, at the first sign of weakness, I'm ready to get short again, but I like that we were able to lock in. We kept half of our profit by exercising some disciplined sales right at Z minus 2. It went beyond Z2 and then came back in. That was actually enough. Caterpillar, we closed that one out yesterday. Today had a big rebound move, but I was happy with cash them when you have them, a bird in the hand. Cliff was a nice win today on a 2-day swing, all flat. Cisco, we've stood by the last 2 days. Look at the volatility in Cisco. I mean, holy mackerel. I can't even justify swing trading it right now, although we have in the past. We are flat in lumber. It made a nice rebound off of Z minus 1 today, so that's actually pretty favorable. So that's lumber. Nice rebound, but we are flat. Chevron is up next. We cashed that 2-day short side swing as it was reversing and coming back towards the Bollinger Band mean. So just taking little slivers and snippets. And if you look back, the last 2 trade frames were like that too. I don't like losing money, and those little green boxes are all the positive captures in both directions. DIA is back into the middle of its central quarter, having almost fallen out of it to the downside. Devon Energy cashed the 2-day swing short. 2-day swing short on Devon. Next up is emerging markets. Just stalking that one. I have been concentrating much more on the U.S. The globals look like they're derivative right now and just waiting and seeing, so they're not like as reliable as the U.S. And have more like after hours issues than the U.S. ones do. So I'm just really standing by on emerging markets. EFA I have been trading, and we cashed that one 2 days ago for a fractional gain long. Japan, we closed 2 days ago. Made gains on that one. Look at the adverse gaps in EWJ. That's a special one. That one gets most of its movement during the gaps. We cashed a short swing in Mexico, a 2-day move. It was about 1.5 execution hour. Brazil, a 2-day swing again. And this is one where it went beyond Z minus 2, and as it came back, along with everything else, I just cashed it at Z2. Facebook just grinding north. That's actually in a position. I'm going to come back to Facebook. That's actually in a position that if it continues to resume from here, that RL10 will have never even gotten through the PSAR. So that's actually a pretty favorable sign. Gilead, we're just observing, flat. Google grinding north, much like Facebook, and you'll see Twitter later. Home Depot, a relative strength leader. Look at the slope line of the RL10 on Home Depot. Never even flinched. One of the 2 or 3 strongest symbols in the Dow. So that one looks to me like a candidate on the short list for auto enter tomorrow. IWM, the Russell, just observing. I'd rather trade DIA right now, although this has been very directional. Matter of taste. Real estate, we got, it doesn't show on here. We got out of this one basically when it came back to its opening. So it sold off, then came back. Oh, did I get that box in there? Hold on. Johnson & Johnson, just observing. We just added that one yesterday. I'm learning about that one. It just closed back to the Bollinger Band main. Didn't get through the Dragon, though, so that's vulnerable to the downside. McDonald's, nice rebound. It's actually probably in worse shape than Johnson & Johnson. The downward move is steeper. It's farther away from the Dragon. It got deeper into the Z2, almost to the Z2. So vulnerable. Microsoft, on the other hand, was pretty good. It only had the 2 days of sell-off. Back above its own PSAR. Dragon is still sloping up. That's in pretty good shape. That's one I would reward. Nucor, we cashed a 2-day swing on that one. Nicely done. Clean Energy, we are flat and just stalking. Had a nice big rebound intraday. That's a good trader. Let's see. Virgin Galactic. So we had 3 in the short stack on this one. And so when it started rebounding, I wanted to get out of everything. So that's all out and we're flat. Simon Property, we were 4 short and then covered the whole thing this afternoon. So we're flat. Treasuries, long, and then cashed it on the rebound back to the PSAR. Yeah, I was up. I'm sorry if I'm yelling. I was up to about 4 this morning reading these master's theses that are coming in under the wire, and was up at 7 to start the defenses. So I'm running on battery power right now. Tesla is grinding and held up pretty well these last 3 days. That's one to watch. I haven't seen any more news about him getting thrown in jail for violating the order. Twitter, he lives a charmed life. Twitter still grinding, but like Microsoft, is in a pretty good posture. Oil, still in that sideways grind. The 2 days of runaway up moves in the VIX reversed sharply today, back in the Dragon. So I still see us in a critical state right now, just like we were 3 days ago and 2 days ago and yesterday. Everybody's on pins and needles. You add to it, it's a Friday. And yeah, so I'm very much flat overnight. And tomorrow I think is just going to be a day trading day for me. Walgreens continues to slide, actually broached through Z-3. I'll get short on any weakness on that one. Walmart. Actually, Walgreens is one that I would hold over the weekend short. Walmart, Dragon is trying to bottom here. The RL10 is kind of bottomed. It's got to make gains from here, though. It couldn't reverse, higher than the opening. So, but I also take this as a sign that there's some upward pressure. I'm getting bullish on Walmart again, right here. It didn't break down to a new low. It held support at previous price levels. The belly of the RL10 in that sense. Wheat and precious metals broke back to the upside. If I was better today, if I hadn't been so tired, I might have tried this one long because it's showing some gains. But I'm just going to play it closer to the vest tomorrow with smaller positions, fewer positions, mostly the broader indexes. Win, just stalking. This feels untrustworthy. U.S. Steel, really nice trade. I love this one. 3 bags short and then made a nice recovery. I'm proud of that one. XLB also got short there at the bottom of the green box around the same time we were getting out of U.S. Steel. Energy, just stalking. It's failing, so get short on weakness. Finance, we covered today on 1 bag short. XLK, we're still flat and it's churning sideways. It has XLK. Let me go back to that one. It has to get out of the river to be persuasive, and really it has to get above the RL10 hump at about 94.5. I should not just say the word, I should show you the visual. Getting mentally tired a little bit. So it has to get above that blue line. That's above the RL10 to really be exciting. Healthcare, just grinding sideways. Did not fully persuade today, but I'm going to give them a benefit of the doubt tomorrow. I'm ready to get long. And then XOP we covered. We were short 3 on this one, and then I feel it went momentarily down below the Bollinger Band mean, but then came back up. So that was enough to get out of all 3. Okay, so that's the speed run. Let's see here. We're going to go to see how I do on these the bar by bars. I'm going to do my best. Okay, so here we are. This is right near the opening? Yeah, this is something near the open. Yeah, this is DIA. So we had just a quick setup. You can see the PSAR failing from yesterday. Here was yesterday's close and the VWAP. Here's today's open with the VWAP. And now we're about 10 minutes in. It's given us a down and up and a down. So we could anchor maybe the top here and the bottom there. So quick judgment from you. One trade is the long side, and probably, let's say, if it broke out, certainly above if it crossed the dragon, and maybe if it broke down below the RL10. So, quiz to you: number 1, are you long if it crosses there? And are you short if it crosses there? That's sort of like the minimum manageable risk box. Or would you be aggressive getting long if it crossed the Z3 VWAP and the peak of the RL10? So that's what an aggressive. Come on, Kenneth. Yeah, right there. So 3 would be an aggressive entry long. Okay. So go ahead and commit to that, and think about where your stop would be. So I'm short at 2, and my stop is just above the VWAP. That's kind of how I look at it. Take something like a VWAP short, a PSAR extension right there, and then maybe Z -1, something like that. If this thing fails, then that angle will get a little sharp, down a little bit steeper. Would be normal. Now, I want you to take a look at wherever your stop is. I want you now to commit to where would you go to no lose plus dinner for 2 if this thing fails. how much further does this have to fail? So some things that might come into play. You might just say, well, here, because that's the current Z2, and that would be enough to tell me that I want to lock it in. I don't want to lose any money on the trade, right? I might also do something like this where I've mapped out my my risk. This was my risk box, something like that. I said, well, if it moved a risk box in my favor, and that's basically Z minus 2. And then if I just was trailing with the risk box, I would be okay. You know, by the time it got down to the blue arrow, then my stop would have moved from here to something like there. Okay, so your mileage may vary. Kind of commit to your decision on your little score sheet, like Z2. Now, if the Z1 had been your choice, you're out. If Skin of the Dragon was your choice, you're not out. If you're the PSAR, which now has to adjust a little bit, that PSAR extension looks something like that. If that little spike got you out because maybe you had moved your stop already, or maybe your stop was lower than mine, you know, then what you got to ask yourself, I'm going to give you the opportunity right now that you can be short again from here if you want to. So the price of sanity is reentry. Reentry makes you sane. It's the key to sanity. And so it doesn't, I don't mind getting out and getting right back in. I mean, what the heck? Were you going to be right? Hey, what if this thing, instead of just reversing like this, had gone all the way, you know, had come all the way to the top. Sorry, I'm in a yellow dot. I'm at this red line. What if that thing, instead of stopping right here, had turned in some kind of performance all the way up, and then turned around and then came later in the day, came all the way back down, and now made a new low of the day? Wouldn't you want to get short again? And especially if that thing happened way over here, and the time it took, let's say it reversed here and instead, you know, did something like this, and had this long grinding move up, and then after a while, you know, it moved up that high, and now it started failing again, and now this time when it came through the previous low, and we say, oh, well, I'd be happy to get short. You know, if it had that kind of a move, and over here, I would just say, oh, well, I just got something like a collapsing dragon, and now I feel professional. Hey, well, I want you to realize that all that happened here was all it did was get to this price level. And if it happens here, instead of way over here, isn't that actually a better place to get short? Because it's clear there was not even enough buying pressure to move it any higher than what it did. There was that little tweak of buying pressure, and then the sellers came right back in and crushed it. So arguably, I would rather re-enter short 2 bars later than 52 bars later, if you take my point. Okay? So you can decide if you want to. If you got out, you can get in here short if you want. If you don't want to get short yet, how far down do you want this thing to go? Put a mark on the wall and say how far down the stack at the previous yellow box excursion, the Z minus 2, Z minus 3. How far down? How much confirmation do you want to have before you get back in? recognizing this thing is, both of those are collapsing dragons. Remember, 2 to 3 and then collapse here. Both of those are collapsing dragons. So I'm short in that second yellow dot again if I got out. Is that enough to move your stop from here down to here? So here's the conservative stop. Is going to be number 1. That's going to be up here. And the aggressive stop is a 5. That's like a 2-bar high. And the PSAR stop, that timing stop, now kind of adjusts to this. The slope of the dragon is now something like that. So you decide which one of those you want, and then do you want 1 or 5? How far is this going to go before you add a second position? Are we getting ready for another position down here somewhere? You going to wait till Z2? All right, Luke, what do we have right here? Anybody? P1, RLXD. That is an unambiguous move. So we have the first 2 criteria of the owl, unambiguous move down, and P1. And now we have at least a 1, 2. Would you cash that? Would you? That's a decision point right there. You could put a stop here, you could cash it, or you could put it at the PSAR. So the conservative guy says, let me see a PSAR. The aggressive guy just says, strike at 5. The mid of the road guy says, give me the spine of the dragon or something like that. So those are your 3 choices for, if I cash it at 5, move my stop aggressively to 6 or conservatively to 1 for the PSAR switch. Okay. Kind of commit to that. So by this time, all of that is done. And somewhere in here, your stop was hit, and you got paid. And now what we have, Luke, do we have an owl yet? Tell me which entry you want. One or two. That's kind of cheating. I obviously want one, right? So now let's start. We're going to take either the OWL or the RLXD entry. We could go swing low. Belly of the RL10 or belly of the dragon for our initial risk. So belly of the RL10 would be a stop at 7. Belly of the RL10 would be 8. So I want you to recognize there's not a lot of adverse price action that gets you out of there. Yeah, point one is probably an RLXD. I like to get it. It hit that tripwire. It stepped on the minefield at the PSAR. And so that's probably, you had a 1, 2, 3 entry at Z minus 1 or an exit at Z minus 1. And then when it hits the PSAR, that's probably enough to get me in. But if you waited till to 2 to get in, I'm not offended by that. But recognize that somewhere in that bar, it got all the way through the RL90 and almost to the Bollinger Band mean. So I don't mind taking the entry when it hits the PSAR with price and just call it an RLXD because that'll happen the next bar anyway. So I don't mind an entry at 1 and a stop at 7. That seems to split the difference. So now, wherever your stop is, really the important level is what's the price level that you got to see in order to move the entry. Let's say that we got it at 1 because we're awesome. And that's what I'm trying to train you to do, especially after 2 runs up and the second run up. I'm going to say, if this thing gets above here, that's when I'm going to move my stop from 7. I'll move my stop to here, something like that, or maybe here. Okay. I'm going to add a second position there. Move my stop to here. I got my eyes on the VWAP right there. Crap. Out. So I make a little bank on it, but it was poised for a big move. Now I'm out. So where am I going to get back in? One argument would be like right here. Um, Another one would be here. An aggressive one here. Yeah, so here you are. Here you are. You're helping me manage my trade because I'm getting ready to run down to a meeting. So I need you to. I want to get back into this thing. Uh, and so if one of those three, as soon as one of those gets hit, we'll get back in. That feels pretty good. There's my stop. This is starting the next leg up. It didn't fail further. You see that RL10 bottomed out. Now I got a higher low. Bam, that's a pocket re-entry. My stop is there, and this is a complete new zero state for me. This thing did not fail any further. So now I'm feeling like this. Orderly sell-off, put in 2 legs up. We're almost at the VWAP. This might be a turning point. Notice how the Z3 lines have scaled in. So I'm going to move. I want you to just pick a spot on the screen. What trigger would get you to no lose plus dinner for 2 on this one? That simplifies things a little bit. For me, it's going to be I think right there. That's where I'm thinking about a second position, like right there. But I think if it breaks above the VWAP, that triggers where I'm going to no lose plus dinner for 2, and then second position at the top green line. Your mileage may vary. No lose plus dinner for 2. Made a little bank. Came down holding support at the VWAP. I'm going to get long again if it breaks above here. If this fails below the belly of the dragon, I'm going to collapsing dragon short. So actually, I'm going to get long if it gets above the skin of the dragon here. So that's my manageable risk box. And whichever way it goes, that's the way I'm going to go. Long. Out of the river into the floodplain. My stop is here. Taking the splitting the difference between the PSAR and the belly of the dragon. So not much risk on that one at all. So we're long one. Easy. Ah. So when it hit that, I got to go to no lose plus dinner for two. We're going to have a second entry in. I'll take, sorry. Damn it. Stop here. I want to make sure that if I get out of both of those positions that I don't lose any money. I'm not losing money on this one. We got two in the can, and we're looking good. Maybe something like that for the third position. Basically the same size of a move up. And if it breaks above the current Z3, then that would be an indication of an amazing move. And out. So that's our little trade frame there. We got paid. Nothing wrong with that. Where would I get long again? Not later than that. And maybe here. Bingo. Somewhere in there. Whether it was this one or this one, you're certainly going to get in by that time. And you got a nice run up and then an easy exit. Afternoon trade. We're almost hour and 45. So I was going to go through this one with you, but what I wanted to show you was that's what that longer trade ends up feeling like. The great big, I want you to just feel this from a distance. Gap down, morning hook, owl, working it, pull back, second leg, third leg up. And that's at 2 o'clock, and that's at 48. So at that point, think, oh shit, this is heck, this is done. That thing closed above 50 today. So there's still 2 hours left in the day. And there it is at 2 o'clock, and climbs all the way up to close above 50 for the day. So you get some of the, look at these well-defined legs from 47.60 to 48.40, so about 80 cents, 80 cents, 80 cents, 70 cents, 70 cents, a dollar, another dollar. So you get some significant moves in an orderly fashion here in UDOW, in DIA. Yeah, Eugene makes a point. Switching to 3-minute charts with smoothing these trades up, certainly. There's some things that I like on the 1 minute, and that's when I'm on the 1 minutes, I pay more attention to the RL10 just because each little price bar could be so nervous. So that's what I wanted to say about today. I do want to lock in this the earlier learning. Again, this one I think is significant. That whole idea of this is like an intermediate time frame, fast swing and slow day, and that 3 day selling pattern, and then what a morning hook looks like, and then figuring out how you can use core and turbo philosophy to get to take advantage of these large volatile moves at the turning points. So when we come back to those turning points, quite often occur statistically when the four seasons are at those critical states. So those are places where you expect to see these kinds of 2 or 3 days in a row of surprisingly large moves. Like the previous 7 days were very quiet, but now these last 3 days have been very large. But that has coincided with a market that MACD has rolled down from the summer into the fall, tried to make a summer, but it couldn't, and now it's rolled back, and now it's in spitting distance of the winter. So as it comes into this train station, it's either going to sharply reverse up with some powerful buying, or no, it's going to start collapsing back down to Z-1 and so on. So when it comes into these critical states is when we get paid to have an open mind with respect to which direction can it go. So if you templated that, put that tattoo on a flashcard there and have that would help remind you to look at the MACD periodically. Okay. And then finally, I would just ask you to think about the power of water, and the whole water metaphor is very, very strong for us. All the uses of water, all the different situations that we find it in, the power of stillness for meditation, the power, sometimes violent, of moving water, irresistible, how it behaves coming out of the mountains fresh and clean, ready to work, how it feels when it's working hard, feeding crops, storing wisdom, feeding animals, making a turning point at a crucial moment, getting into the rapids, then over the waterfall, into the reservoir, and then what happens on the complete reset if you survive. Otherwise, that kind of grinding moves with the fake one, go two. That's the whole seasons and cycles and the life of water, the water of life. That's what I want to talk about tonight. Okay. So thanks, guys. I'll get this processed and posted. The reports are finishing up right now, and I'll get them uploaded at Patreon shortly. Take good care. Keep marching. And tomorrow is Friday. It's going to be magic. A violent day tomorrow, right from the opening. So take good care, and we will see you in the chat room. Keep your wrist measured and your powder dry.